He's been with the company since it was created in 2011. He is a qualified chartered accountant. In fact, he's ranked 10th in his final exam. My God, that's quite scary. 10th in India in CA final. That's sort of serious respect to you, sir. We are huge fans of Indian CAs, and you're right up there. He's also a qualified company secretary. He was previously associated with the AU Small Finance Bank as its business head. He used to look after SME and mortgages. As many of you know, AU too is a part of the Kings of Capital portfolio. Before AU, Sushil Kumar Agarwal was with ICICI Bank Limited as its chief manager. And prior to that, he was with Kotak Mahindra Primus Limited. He has more than 20 years of experience in Indian financial services. And as you could make out, all of that is in the Premier League. Almost all of Sushil's experience in Indian financial services is in the Premier League of Indian lenders. So Sushilji, welcome to the call. Over to you, sir, for your opening thoughts.
Yeah. So good afternoon, everybody. And Saurabh and Tej, thanks for giving me this opportunity to showcase our journey and share our experiences, and also learn from the participants' experience and questions. So I belong to a lower middle class family. My father is having a cloth shop still. He's going. I also spent some part of my life there. So in graduation days, 7 to 11 college and 12 to 8 at the father's shop. Incidentally, I was good at studies, so I did my CA, CS, and then I worked almost 9.5 years, 1 year with Kotak and around 9 years in ICICI Bank. Incidentally, in ICICI Bank also, I became national head at the age of 27, 28. And so it was early rise, and there I've seen first 5-year home loan mortgages. So I used to see entire North and East. And then when I became national head, I took the portfolio of MSME. There I've seen almost 10 portfolios in my 5 years journey at the corporate office. At the age of 32, I decided that I will do something of my own. And at that point of time, I met Sanjay, and we decided to start a housing finance company. So I joined as a CEO of a housing finance company in 2010 April. It took us 1 year to get the license. And during that time, I started building MSME book for parent company. And in between, I've taken several roles along with my CEO as a housing finance company. So I was business head for MSME, so all non-vehicle verticals of AU Bank. I was group HR head for all the 3 companies. In between, I headed sometime treasury also, technology also. And in 2014-15, when we got the bank license, then our independent journey started, and now it's 6 years as an independent journey. So when we decided to start the housing finance company, initially we conceptualized what we want to do and what we should not do. And we were lucky that IFC, which is a World Bank arm, and their global housing specialist team, and some part of Hdfc helped us shaping up answers to some of the difficult questions when we entered into this business. So like some questions were like, which is the customer which you will fund, which Hdfc cannot fund? Market is already dominated by AAA guys, so how you will survive in this market? And I used to get homework every month, and I used to do my homework and submit it to IFC Global Housing Specialist and some of the seniors in Hdfc team. So like first question, which is the customer in India which we would like to fund, and maybe AAA guys and dominant player will not fund. So for that, we did a market survey with IFC. We paid 50% cost, they paid 50% cost. So we took Rajasthan as an example. So Rajasthan market, that point of time, 2010, 33 districts, 247 towns, around 6 crore population. So we mapped all 247 towns. If a customer wants home loan, what are the choices he has? So incidentally, after the entire study, we came to know that after 247 towns, large players are catering only 10 or 11. So first rule which we made is 247 minus 11. So we'll not go into those markets where already AAA guys are there and they are serving the customer, because we will not be competitive. We started our journey from BBB minus rating and 12% borrowing cost. And at that point of time, their lending rates was 8 or 9%. So we chose a different market segment niche where their penetration was not there. And in those markets, that point of time, either nationalized bank, some cooperative bank, money lenders was there. So nationalized bank were also comfortable funding to the salaried customer or businessman who has some lending relationship with them. Otherwise, they were not able to open to lend anybody else. So we thought this gap we can identify as a potential. So first year, I met somewhere around 2,000 customers. First year we disbursed 1,000 customers. So I met everybody, all 2,000 customers. My Innova reading was 72,000 kilometers for first year. So from ICICI Bank, where I used to see 5 lakh to 200 crore single proposal and having 25 crore rupees sanction limit individually. From there, I started sanctioning 5 lakh rupee, and beyond 5 lakh, me and Sanjay both will sign. And condition every customer I need to meet. So I need to unlearn whatever I have learned in my first 10 years of journey and started this new learning journey. And that's how we chose our segment that point of time. Secondly, we made certain choices in our initial years with the guide from IFC and senior team. So some of the guidelines that we will not do any risky assets in our journey, because even large players were not able to sustain or survive with those kind of things. So we decided we will not fund land loan, we will not fund builder, we will not fund more than 1 crore rupee of loans, we will not do apartment properties. So the decision was like, we want to target 20,000 to 60,000 rupees per month income segment, that too informal and unserved and unreached market. When we started our journey, 70% customers were new to credit. They have not taken any loan. So those customers, they cannot pay rent and also EMI till the time they will not get the property. So we decided any property which cannot be habitable within 6 to 9 months time, we will not fund. So, so entire market of apartment property builder we have left. Okay, we will not do this kind of thing. And fortunately, all those good decisions which we have taken has made us survive in our life in last 10 years. So in last 10 years, we have seen survival risk every year. Survival risk, when I say, one thing we were cognizant that we don't have any daddy in this business, and our definition of daddy was either we are supported by a AAA parent or a big business house. So if you will do some mistakes, they can say गलती हो गई बच्चे से और ये हमने capital डाल दी and we will do the business. So we were not having those choices in our business, so we cannot make any mistake. If we do mistake, we need to go home. So with that perspective, everything we choose in our business was having that shadow. So like from last 7 years, we have highest rating on short term, A1 plus in the market. But till now, we have not raised any short term borrowing. So today, or even last 10 years journey, we have average tenure of our home loan book 7.5 years, and our average borrowing tenure is 12 years. So we will be among very few companies in India or world which has 10-year every bucket positive ALM. Despite we were having the choices, we said we will not take any shortcut in our journey, and whether it's a Lehman Brothers, Bank of Japan, Freddie, Penny, or Saurabh can quote more incidences where financial institutions failed. So it was asset liability mismatch. Even on the floating and fixed rate interest side, we are perfectly matched. So we were so attuned that what can go wrong in next 20 years journey, and at least whatever we know, we will. So SDFC and IFC, when they used to give me homework, so we plotted almost 20 years of journey of every existed HFC and NBFC in India. And what was their cycle? Initial 3 years, after 5 years, after 10 years, after 12 years, at what rating, how they move, leverages, what kind of diversity they can bring. And those who failed, what mistakes perceived by the outer world they have done. So at least we will not do those same mistakes again and again. On the underwriting side also, when we chose those markets, tier 2 to tier 5, from my experience, I define that housing is not only the underwriting risk, it's combination of 4 risks: underwriting risk, security creation risk, technical risk, and fraud risk. And all are 4 equivalent. It's not that underwriting is 90 and rest are 2.5, 2.5, 2.5. It's equal. So in corporate world also, when we do lots of forecasting of income, etc., and when IM and CA guys like us do corporate forecasting, and every 2 years the cash flow goes for a toss, तो हम तो उस सेगमेंट को फंड कर रहे हैं जिसके पास इनफॉर्मल इनकम सेगमेंट है, तो उसको आप कितना भी फोरकास्ट करोगे, इट कैन गो समवेयर रॉन्ग. बट आपने बहुत अच्छी चलो अंडरराइटिंग भी कर ली और आपने प्रॉपर्टी का एवेल्यूएशन किया. आई विल गिव सम एग्जांपल, लाइक कि आज अपने प्रॉपर्टी फंड की और गवर्नमेंट के मास्टर प्लान में 25 साल 10 साल बाद आ रहा है कि ये रोड चौड़ी होगी और ये प्रॉपर्टीज को चली जाएगी. तो कितनी भी अच्छी अंडरराइटिंग की, आपकी सिक्योरिटी 0 है. आपने दोनों चीजें बहुत अच्छी की और मालूम पड़ा कि आपका ना कलर जीरोक्स ले लेके आप प्रॉपर्टी पेपर रखे जा रहे हो अपने ड्राइंग में, तो सिक्योरिटी क्वेश्चन ही नहीं हुआ. तो आपका मतलब अंडरराइटिंग 0 है. और ये सब बहुत अच्छा किया आपने, और फिर भी आपके कोई फ्रॉड हो गया आपके साथ में. So we built our strength on all the 4 terms. And if you see today, we have more than 400 chartered accountants, 150 civil engineers in house, 125 lawyers in house, 100 people in fraud risk. Last 11 years of our working, after disbursing almost 16,000 crore rupees, total cumulative write-off is around 16-17 crore rupees. So cumulative write-off in last 11 years, 10 basis point. So I think those learnings has helped us evolve, save, survive with those kind of methodology. And we always wanted to have a consistent player. So one thing which I've learned from my grandfather is that if you have 1 crore rupee and 20% CAGR growth, 35 years, it makes 1,024 times. So there is no need to hurry. You need to survive for 35 years. Anyway, it will be 1,024 times. So if you will see our journey in last 10 years, every year we open 30-35 branches. So today we have 320 branches. Even in COVID phase 1, even in demonetization, even in COVID 2, we were consistent. We open 30 branches and distribution model continues. Every year we used to increase our disbursement level from 30 to 40 crore rupees per year. So on lower base, it may look like a higher growth, but if you see from my angle, it's consistent. So today, when we, after 10 years, we are delivering 400 crore rupees per month. If you see 1 year back, 360 or 350, go 2 year back, 300. So it's consistency. So operating metrics wise, and so in everything which we do, and 5 years before then we embarked on technology and analytics journey. So today, I think we have 100% portfolio on heat map. So earlier days, people used to take MICs on country level, state level, district level, SPC level, pin code level. But now if you will put a finger on the map and say within 5 kilometers of this finger, how many customers you have and can you give 7 years demographic details? I can tell you perfectly in 5 minutes time. So we have done that kind of enhancement in technology analytics side. Today we do predictive analytics a lot. And so we have 120 people tech team and 15 people analytics team in house. Some of the guys ask me whether you are running a tech company or a housing finance company, but it's a difference. So today, after this 10-year journey, we are processing 15,000 new home loan applications per month in 10 states. We do 4,000 to 4,500 new home loans per month. We process all these files, 99.7% file in 10 days time from first day lead to sanction and rejection. We do 51% cases from first touch point. Within 10 days, we transfer the money into customer's account. So every month we do 4,000 to 5,000 new disbursement and 4,000 to 5,000 subsequent disbursement construction cases. Now entire 5,000 part disbursement or subsequent disbursement has been on fintech platform, out of which 80% of disbursements is 24-hour tests. So I can go on telling about our technology and tech journey, but I think that has helped us keeping that customer experience technologically advanced. HFC, and we work a lot with IFC team still. They see us our child, and right now we are running a very large advisory project with them on green building housing. We are changing the green building norms according to Indian standards. Largely till now it is European and American standards. We have already completed that part, and now we have done pilot run. Hopefully next 10 years, individual houses. Till now, what happens when a L&T create a project? When L&T create a project or some large hospitality or hotel, when they tag themselves as a green building. But we are converting 10 lakh rupee houses. How we can classify them in a green building? What they need to adhere? What material they used to do? And I think if we will be successful, going forward, 25 to 30% of our new funding will be a green building certified housing. Recently, we have raised a Bronx Bond from CDC, UK government arm, which is fully women ownership documented fund. It's a rupee denominated fund, $60 million, where we will fund only those houses where the ownership is with the women, not only the ownership and the income also. Today in our portfolio, around 45% of the individual houses are funded where individual woman is the owner of the house, not traditional way the male side of the house. So this is our journey, and we want to continue this consistent journey. In our philosophy, the metrics is asset quality, then operating metrics, then growth. We plan always for 10 years, then we build 3 years ahead, and we execute for current year. So I think that has helped us seeing separation from AU, demonetization, liquidity crisis. On IPO day, market crash 40%. Then COVID phase 1, COVID phase 2, COVID phase 3. Still surviving, still we are consistent. Even in COVID, we have 22% CAGR growth when everybody was -4, 10 and -40. We are able to maintain our spread. 2010-11, our spread was 5% when we were borrowing 12, and now our borrowing cost is around 6.5%. Still, we are having the 5% spread. On the ROA side, consistently giving 2.5% across last 44 quarters, 2.4% more. Asset quality wise, I think we are the only company which publishes one-day past due number from the very first year of operation until day. We are continuing even in difficult time of COVID, etc. We never said that we will not publish. And hopefully by March this year, we are again pre-COVID level. So one-day past due number will be in that range, which I think is the signal of coming normalcy and consistency again in our business. So I think I've talked a lot. Maybe now I can answer some of the questions which...
That was very useful, Sushilji. Sushilji, we can hear you loud and clear. There's no problem with the audio. So those who believe there's a problem in the audio, just log on and log off, because there's no problem with Sushilji's line. Tej, over to you for the Q&A.
Sure. Thank you, Sushilji, for that wonderful walk through your journey. You elaborate, if you talked about this, if you could elaborate more on, how affordable, as an affordable housing financier, you've been able to lend over this 10-year period in the face of competition from banks, AAA rated HFCs, other larger players, and how you've been able to build a competitive advantage in affordable housing?
Yeah, so there were 3-4 things. First, maybe I will connect with some of the analytics data across the India. So India has a 140 crore population, and top 50 cities has almost 30 crore to 40 crore population divided by 4 or 5. We have around 6 crore households there. 30 crore divided by 5, yes, 6. And in those top 50 cities, live home loans are around 1 crore. So around 15 to 17% penetration in top 50 cities. Rest of the India, 100 crore population divided by 4 or 5, 25 crore household or families, and 30 to 40 lakhs home loan till date. So if you see in that bracket, less than 2 or 3% penetration after 75 years of India. So we have perfect data of India, then state level, then district level, then tehsil level, population, number of families, number of live loan accounts, what is 1 day past due number, what is 90 day past due numbers. So we chose those markets where housing penetration was less than 5 to 7%, so that we can sustain in that market for next 15 years journey, and we can really tap unserved, unreached market, and we can do. So one is choosing the right market with proper analytics data, deep diving coupled with our learning at the ground. Second thought, when we were opening the branches, so how branch operation can be self-sustained, that we do. So there are 2 aspects to branch. One, when we open a new branch, first 30 months we say we will not have any targets. We want to do what is right as per us, and we want to learn about the market, cash flows, seasonality, how the patterns work, how judiciary works, how the land laws work. And once we get a confidence only, then we will expand in those markets. Second, any branch we open, what we say is that, I will give you an example, like if it's a 2 lakh population town, so divide by 4, around 5,000 families, 50,000 families. So we say we want to cover 5% of this market. So 2,500 loans. So 2,500 loans divided by 15 years means 180 months. So around 15 files per month. So 10 lakh का ticket size है, 1.5 crore रुपए per month का potential हो गया उस market का. So in that market, we will deploy 250 crore rupees over a period of 180 months, 15 years. And that way we define the market potential. Now, if we are getting say 2% fee on 1.5 crore rupees or 3 lakh rupees, so branch OPEX cannot be more than 3 lakh rupees. So rent, tankha logon ki, bijli, pani sab mila ke. So maybe within 8 to 15 months, branch reaches that potential. So fee income versus OPEX is matching. So lending rate minus borrowing rate, and that branch is sustainable. So till now, if you see last 11 years journey, we have not closed a single branch. And 90% of our branches are ROE generating within first 12 months of the operation. So I think, so it's a patience journey, choosing the right market, stick to our own model. Because normally what happens when we go to new market, you need to hire some local person, then they will tell you, if you want to work in this market, this is how the things will work. And if you go with that flow, certain times you need to burn your fingers. But we tell it when we go to the market that this is our established practice. You need to work around this. There is no sales pressure. We will check the market according to our practice. We will learn over a period of last 30 months. There should not be a single 30-day DPD case. And there is no pressure of ROE because in our business model, we have coupled that in our mathematics. So I think that has helped us. So challenge for me was, we are so good at 50 branches, whether we will remain same at 100 and different markets. When we were 100 at good market branch, can we replicate at 200? When we were good at 200, can we replicate at 300? So now the still challenge is same. We are good at 320. Can we replicate at 600? And I think we have addressed those 3-4 decision-making elements and with more consistency. So if you will ask me what branch I will open in 2031, I can tell you today. Next 10 years planning perfectly coupled with analytics, insight, and ground level learning. So you are not in a hurry. And I think that patience journey in this life has helped us navigating difficult times, navigating competition, and creating our own niche in an informal income segment, that too self-employed, that to 70% new to credit customer. And I think these 3-4 things has helped us in our journey.
Right. A follow through on that would be, we've seen that a lot of technology is nowadays being used in, say, unsecured lending or in personal loans. But the general belief is that when it comes to, say, high touch lending like, say, affordable housing or vehicle financing, where it's lending to the unorganized segment plus relatively larger ticket sizes, it's difficult to use technology. So how have you used technology, whether it be on underwriting or collections or setting up branches?
Yeah. So I think I don't believe in that notion, because technology across the world, and I'm doing my Harvard course also, so I will be Harvard alumni this May. So what I have learned is that technology is relevant in every business, and technology helps in 2 things: changing the customer experience, changing the employee experience. So technically speaking, though, till 2015, we were not that good in that segment. And then we identified that we need somebody senior who can help us and guide us in this journey. So we chose Sandeep Tandon sir as our board member. Now he's chairman also. And he has investment in every tech startup in India, and most of the unicorns. He's the first level guy. He is a USC master's in technology. He helped us building that journey from 2015 till now. Today, minus property, we are equivalent to any fintech which is in India. Because when I'm saying whether you apply in a tier 5 town or you apply a tier 2 town, if we are processing 99.7% consistency in 10 days time, and if subsequent disbursement is happening within 24 hours, I'm matching all the fintechs. The only difference is their NPAs are in 2-digit from 10 to 40%, and still we are maintaining 0.5%. But I will tell you our technology journey. Likewise, I will tell you today we have 100+ people in tech team. We have digitized every process. Today, 100% leads come through our mobility app. 100% repayments are through digital mode. 100% of our data is on heat map, I've told you, with latitude, longitude. We do our entire data documents is in digital form for the company. We do predictive analytics. So which customer will bounce, we track minus 30 days, our accuracy is 87%. And so when normally people start collections when it bounces and 1+ and 30+, we do it minus 30. So I think that helps us where we are in our collection journey, etc. Our entire allocation is tech and analytics based. Our customer attrition rate pre-COVID was 4% only, against the industry 18%. So we use predictive modeling and customer retentions. So I think we have used technology from 3 perspectives. When you use anything, so we write something, mission statement, what is the risk we are foreseeing, what problem we want to solve. So we decided that today we are small and there is less competition in our market. Tomorrow, when a kid will be on table's height, so today now we are like कि हम table के height से वाले बच्चे बड़े बच्चे बन गए हैं, so everybody recognizes. So हमने बोला कि technology can help us in 3 ways. One, in the difficult market, only customer experience can make you survive. So technology will help us changing the customer experience, which we have demonstrated. Second, when you are in lower ticket size, your OPEX are high. So in a longer run, if you use technology, it gives you leeway, sustainability. You can reduce your OPEX, and which you see this, except this COVID year, we were able to reduce our OPEX 40 basis point year on year, despite businesses growing 22% CAGR. And third is the survival risk. We always used to say that somebody can come with $1 billion that I don't need any return on this and I will disrupt this market. So technology can be that disruptor. So we need to make ourselves ready. And for survival, this is the main thing. So with this 3 objective written, we started our technology journey. You see that COVID happened. Nobody has written that COVID can be a risk on the at least. So Saurabh, I always say 2 risks: Asmani and Suleimani, act of God and act of government. So everything is subject to that. So certain things we can predict, certain things we cannot predict, but we need to make ourselves agile for that. So when COVID phase 1 started and lockdown happened, within 2 days, we were live, 100% sourcing, 100% customer meeting, underwriting, collection digitally, customer service, entire banking transactions. 150 BCP center live within 48 hours when entire country was shut. So that's the kind of technology readiness we were there. So it's like a fintech without any office, can you sustain? And we talked 100% of the customer during COVID, 100% of the customer. It's not only that जो default कर रहा है उससे बात करेंगे, जो restructuring के लिए फोन कर रहा है बात करेंगे. We talked all 1 lakh 25,000 customers that time. Now we want 1,50,000. That has helped us understanding the customer, surviving in difficult times, and that's where you see even in COVID 22% CAGR, despite everybody was -4, -10, -12, -20. So I think technology has helped us in that journey, and going forward also we are making large investment in that side, keeping in view next 10 to 15 years of journey with that. Even if we do 22% CAGR growth, if we are treated around 11,000, 12,000 crore, it might be 8 times or 10 times of that level. So can we sustain our journey? So we are doing that investment today. And I think we will continue doing that investment. And I say we are better than any fintech in India or today on any of the processes, keeping in mind property and mortgage hiccups and constraint which we are living in this India with this.
Sushil, if you don't mind, is it all right if I start taking questions from clients on this subject? Because this is I think the subject Sushil is discussing is of immense interest to I think not just our clients. I suspect every lender in the country actually is looking to learn from Sushil on this regard. So sir, in your recent results, you said that clients who are 1 day past due, that number 1 day past due, those clients are already back to pre-COVID levels, right? So in terms of delinquency,
almost touching by March, yes, we were 6.2, but pre-COVID we were around 4%.
Okay, so you know the numbers clients who are behind in their payments are rapidly come down. Your net NPA figure I think is 1.2 as per Q3 results. Net NPA figure 1.3%, which is just to contextualize, a high quality lender like Bajaj Finance is 0.8, Kotak Bank is 0.9, and therefore both AU and Aavas being at 1.3 suggests solid control on NPAs. Now, in your case, see, Kotak Bank having a 0.9 doesn't surprise people so much because they say Kotak Bank, low Kotak's own cost of capital is lower. Kotak का client base बिल्कुल prime है, so 0.9% Kotak net NPA logically लोगों के दिमाग में बनता है. In your case, as you said, you are lending to people 5 lakhs, 10 lakhs, people who are in the less privileged section of society, people who are likely to have suffered economic injury in COVID, right? Economic injury, given that country में FMCG की sale रुक गई है, two-wheeler का sale रुक गया है, how come Aavas net NPA figure does not reflect the economic injury that less privileged people in India suffered due to COVID? क्या जादू किया सर आपने?
So sir, first I want to correct this number that as per, so we are around 0.8 and gross NPA. With new RBI definition, it is 1.2. So effectively our 60-day past due number is 1.2, not 90. But NPA numbers, if we go RBI new definition, that is there. But we are hoping that by March we will again be even 60-day past due number below 1%.
Right, sir.
So we are not doing any magic, sort of, as I have told you, the choices which we made in our life. First, we removed all the risky assets. So no land loan, no builder funding, no more than 1 crore funding, no apartment funding under construction. So I think that has helped us, saving us from the risk. Second is 95% of our customers are living in that house. So we don't fund investment property.
Right, sir.
When we fund customer also, after 3 months, we check whether customer has shifted in that property or not. If he has not shifted that property, we create an additional risk provisioning that that in our portfolio customer is not living. But today, confidently, 95% living in that house. Our loan to value ratio is somewhere around, at the time of sanction, is 50%, 55%, and AUM basis around 47%. Average ticket size is 10 lakh rupee. Then I've told you underwriting side, but I will tell you one more thing where analytics has helped up. Last 40 quarters, so in self-employed category, everybody says salaried customer का risk कम है और उसमें तो हर जना कर ही लेता है. So on self-employed side, 65% customer, we have around 35 profiles which we fund. 35 profiles, quarter on quarter, demography by geography, we have our analytics data and we color them red, amber, green, and wherever we see it's moving from green to amber, we've increased 2 filter. If moving from amber to red, we increase 3 more filter. And one mistake which we did, again, we put in our system. So same mistake cannot be repeated everywhere. So I think that has helped us immensely in our journey, because so much of granular data, if you will ask our auditor, they audit almost maybe 35, 40 NBFC, HFC. And when they were doing this provisioning exercise with us during COVID, so data with so much granularity that 35 profiles in your SCNP portfolio, you have quarter on quarter, we have talked 100% of customer, which customer profile got what kind of impact. So I will just give you impact 4 profiles. One is who got positively impacted by COVID. So your Kirana wala, medical wala, they were positively impacted. Their business has gone up rather than going down. Then there was second level of guy. As soon as the things opened up, they were normal. So like your hardware shop, your all those second level of category. Third level category, which took some time after opening up also to recover, coming on the same cash flow. And fourth category was hospitality, tourism. Those were badly affected schools, where still एक तो लॉकडाउन उनके लिए लंबे तक रहा, गवर्नमेंट ने अलाउ नहीं किया और their cash flow impacted. So that segment was only 1.6% out of total 100%. So with so much granularity and each profile, how they are behaving, and you are putting into that provisioning system also. So I think that helped us. So 3 things: choosing the right segment where will be less competition, then doing removing risky assets, then putting right parameters, underwriting risk, legal risk, security risk, technical risk. Fourth, analytics. I think all these 4 put together, if you bundle it up, I think we were safe.
So folks, keep putting in more questions. We've got Sushil ji till 6 o'clock. We'll take as many as possible. Tej?
So one of the questions we've received is, why did we make the decision of having so much capital on the balance sheet? And we are at 50%, around say 50% capital adequacy. And the result of that is the question that, we have also excess cash lying on the balance sheet, which is unlike many lenders who believe that, there is a negative carry, there is a drag due to this, not only on ROEs, but also on net interest income.
So I will answer this question from two learnings. One is when we did the exercise of last 20 years of every HFC and NBFC which existed before we started the operation. So if you will see when some of the very well recognized and established player of last 30 years, you will see Kotak, SDFC, and if you see when they were of our size, how the ratios were there. So it will be same. So we have took that learning. Second, it's a journey for a lending institutions. When you start with BBB minus and when you are creeping with to a AA minus, you are working in an ecosystem. Now, ecosystem, how it works, one is your regulator. So today my loan is 10 lakh rupee average ticket size, entire book is less than 30 lakhs. So as per regulator, you have 30% risk weightage. तो 12% कैपिटल चाहिए, 30% रिस्क वेटेज, तो 4% ही कैपिटल चाहिए आपको रन करने के लिए. सो एज पर रेगुलेटेड डेफिनेशन आपके कैपिटल एडिक्वेसी रेशियो आता है 50%. बट व्हेन यू गो टू रेटिंग एजेंसी, दे सी योर टोटल AUM डिवाइडेड बाय कैपिटल. सो दे सी लेवरेज, दे डोंट सी कैपिटल एडिक्वेसी. बोलते कैपिटल एडिक्वेसी कोई काम नहीं आती है, हमको ऐसे देखना है. तो इफ यू हैव 10,000 crore AUM and if you are 2,000 crore capital, it's a 5-time leverage. As per them, that is also high for a A-rated company. So and third is your banker, जिससे आपको रोज पैसा लेके आना है. तो banker C, it's a debt to equity. So banker C debt to equity is again a different norm. So as a CEO of a financial company, I need to keep all the stakeholder consent, and I need to adopt whichever is the conservative one, because मेरे को रेटिंग भी चाहिए, मेरे को बोरिंग भी चाहिए, और मेरे को रेगुलेटर की बात भी माननी है. तो जब हम A rated थे, then as with the market knowledge, last 20 years history, जब लोग जो लोग आज ट्रिपल हैं वो भी कभी AA थे, कभी वो भी A थे. तो आप उस समय की जर्नी देखोगे, so you will find it's the same ratio. तो वो लर्निंग हमने ली, हमने the board के सामने रूल बनाया कि till the time we will be A rated, we will not leverage more than 5 times, and once we will be AA kind of journey, we can go maximum to 6. And with that context, last we raised money also in our IPO. And उसके बाद में क्योंकि अब 20% ग्रोथ है, 20% हम असाइनमेंट कर देते हैं, 15-16% ROE के आसपास पहुंच रहे हैं, तो it's a self-sustained business model. Even if we were 1 lakh crore, we don't need capital. But 55% capital adequacy, I've told you the background. So how I see, and second is, मैंने सबसे पहले आपको बताया, we don't have daddy in the business. तो जब आपके business में daddy नहीं होते, financial business में capital daddy होती है. And it has given us navigating factors, surviving today, or borrowing cost, if it's 6.5% for 10 years, India's GSEC is 6.9 for 10 years. We got confidence, we are getting money to scale up. So all these parameters are relevant when you take this kind of decision. So I don't think so. But if you see cash journey, again, I will tell you, when we were 8,000 crore, it was 1,500 crore. When we are 12,000 crore, it's 1,500. So in the balance sheet, if you see, this ratio has reduced. If you see the same journey of large player when they were at that size, you will find the same number. I have all the 30 years or 20 years journey of everybody when they were of my size and how the balance sheet used to look like for them. So I think this will help us going forward in long-term journey. We still need to have, मैं सबको ये बोलता हूँ कि अभी 10-11 साल हुए हैं, so it's the start of journey, and we need to survive more. And these are the logics by which I think capital structure and borrowing structure has been defined in our company.
So Sushil ji, if I can come at the issue from another perspective, sir. Obviously, if a lender has high capital adequacy or low leverage, when the ROE gets compressed because of that leverage, right? Whilst you folks have done a tremendous job operationally, right? We discussed the stellar performance on asset quality just 2 minutes back, right? In spite of all the mehnat, आवास का ROE अभी भी 13-14% के आसपास है, right? Because the capital adequacy is so high. Is there a way for you to get the ROEs towards, say, the high teens, given this high level of capital adequacy, sir?
So, Saurabh, when we were going for the IPO also, I think I have made that narrative, and still that narrative is same for me, that our business model is self-sustained. We don't need capital for at least 5 to 10 years kind of journey. And if we are growing 20 to 22% every year, not raising the capital, anyway, ROEs will normalize with 1 to 1.5% every year. Right. If you put aside these 2 years of COVID, despite that, if we are reaching that number, and we always say that 2.5% ROA with 6 to 7 times leverage, that is the ideal position for us. And I think despite COVID, we are reaching that number this time. अगर कोविड का 4.5 महीने का इम्पैक्ट कर ले तो मेरे हिसाब से whatever is self-sustained business, तो मेरा ये कि 16-17% ROE आएगी. अब 20% से बिजनेस ग्रो करो, 20% हम सेल डाउन कर देते हैं तो 16% ग्रोथ है, 16% ROE आ रही है. This business self-sustained for life. For this life, you don't need the capital. So I think we are on the right path. We need to say, मैं सबको ये बोलता हूँ 35 साल की जर्नी, 140 क्वार्टर, विद सब्जेक्ट टू आसमानी सुलेमानी, 1 क्वार्टर आगे और 1 क्वार्टर पीछे, बस यही लाइफ है. अदरवाइज इसके अलावा आई थिंक वी आर गोइंग ऑन राइट पाथ, and we don't commit that it will be 20%, 24% ROE business. It will be 16 to 20% ROE, and I think we're in that range. If we'll avoid 4.5 months with loss in 2 years time.
And I'm sure everybody who's listening knows that इतिहास गवाह है 16 से 20% ROE consistently Indian lending में जो करता है वो lender solid durable institution बनाता है. Tej, I'll take a couple of questions from Daljit Singh ji, a couple of queries from Daljit Singh ji and Ashok Suraya ji. I'll put them to Sushil Agarwal ji, and then I'll hand it back to you, Tej. So sir, the one question that's coming through is, given all this metrics and analytics you have, Sushil ji, you must be tracking कितने borrowers को आप reject कर रहे हो, किस प्रकार के borrowers को reject कर रहे हो. उस एनालिटिक्स से क्या मैसेज आ रहा है सर ओवर द लास्ट 2-3 इयर्स, स्पेशली कोविड के दौरान, किस प्रकार के बोरोवर रिजेक्ट हो रहे हैं, कितने परसेंटेज ऑफ बोरोवर्स रिजेक्ट हो रहे हैं?
So sir, I will give you some numbers, but I think more or less it's the same trajectory for us last 8 to 10 years. Today we are sourcing almost 15,000 new home loan applications, and we are disbursing 4,000 to 4,500 new home loan applications every month. So ratio is around 30%. And if you will see it pre-COVID level also, the ratio was same. If you see 5 years when we came for the IPO, I think that is the same. Okay. And I think that is our strength, that business is not under pressure to deliver numbers. So at least credit guy has right to say no when they want to say no, because the inner incoming funnel is so good that अब इसमें जर्नी में सर क्या होता है, कुछ चीजें हमारी रिस्क बेस्ड प्राइसिंग मैट्रिक्स को मैच नहीं करती, तो हम उसको हम क्रेडिट वाइज कर सकते हैं, लेकिन रिस्क बेस्ड प्राइसिंग पे नहीं आते तो नहीं करेंगे. कुछ लीगल रिजेक्ट होगा, कुछ टेक्निकल रिजेक्ट होगा, कुछ कई को हम कस्टमर को हाँ करते हैं तो कस्टमर के पास हमको ना कहने का राइट होता है कि आई एम गेटिंग ए बेटर ऑफर फ्रॉम डिफरेंट पीपल, सो वी कैन टेक दैट. बट ट्रेडिशनली आई थिंक 30%, 35% is the ratio. When we start doing better than this, we improve our filters. So that's the journey. We want to maintain that sanity in our book. But the way I decided, we plan for 10 years, we build 3 years ahead, and we deliver for current year. क्योंकि lending business में जब आप pressure में धंधा करोगे तो सर फिर वो नंबर थोड़े गलत हो जाते हैं. So we are comfortable with that number strategy. But I will tell you one more interesting thing. Every quarter, we do 100% portfolio, you can say scanning, and we map our existing customer, good with us, good with industry, good with us, started defaulting industry, Good with us, has not taken any further exposure. Bad with us, bad with industry. Bad with us, good with industry. Bad with us, not taken any further exposure. Every quarter. So dynamic underwriting of entire portfolio every quarter since last 6 years. Secondly, we also check any customer we have rejected in last 2 years, if he has got the loan from somewhere else and how is behaving. So pre-COVID level, any customer we have rejected and has got the loan from outside and behaving right, it was only 2%. So I'm okay for 2% error in my underwriting. And so much of analytics data I can give you, but the way we operate. So I think these things helps us keeping us, क्योंकि देखिए आज हम ट्रेड के धंधे में हमारा ये भी एक नुकसान है कि अगर बहुत अच्छा कस्टमर उसको हमने नहीं दिया तो अपॉर्चुनिटी लॉस हो गई, कॉस्ट तो लगेगा ही. हाँ जी. But 2% error, it's acceptable in our thing, right. And we check it last 10 years. So I can give you lot of analytics, lot of data.
And this 2% number, Sushil ji, has reduced over time. 5 साल पहले कुछ ज्यादा होगा शायद. आज maybe 2 has come down after COVID.
नहीं सर, कभी ये 4-5% पे हो जाता है, फिर हम थोड़ा सा अपने आप को लिबरल करते हैं, right, कि कौन से सेगमेंट हमने किया और बाहर से मिल रहा है और सही पे कर रहा है, और कई बार हम जो गलती कर रहे होते हैं उसको टाइट भी करते हैं. But more or less 2 to 4% is last 8 years journey for us.
Very interesting. And Ashok Siroya ji is asking a question. In a way, he's asking 2 questions. There are on either extreme of your credit experience. So he's asking prepayment penalty aap lete ho kya? And you know, how relevant is the prepayment penalty? Because your best customers presumably can refinance with, say, Hdfc Bank or ICICI Bank. So prepayment penalty se aap refinancing risk ko kaise cover karte ho? And the other extreme, almost all of us know India mein property is an illiquid asset. So even if you repossess a property in a tier 2 city, you know, can you really sell it? And therefore, is it really valuable collateral or is it just a dead asset in your hand?
So sir, मैं पहले वाले क्वेश्चन का आंसर दूंगा सर का कि कस्टमर का रिटेंशन प्रीपेमेंट पेनल्टी से सर कभी नहीं होता है. Second thing, over a period of last 10 years, regulator has made all those rules. तो as per रेगुलेटर होम लोन पे हम कोई प्रीपेमेंट पेनल्टी नहीं ले सकते, तो उस पे आप प्रीपेमेंट पेनल्टी नहीं लगा सकते, एंड वी फॉलो द सेम रूल. सेकंड इज, बट आई विल टेल यू सम ऑफ द प्रिंसिपल्स व्हिच अडॉप्टेड. मैंने बोला कि हमने अपना स्प्रेड मेंटेन रखा सर, तो व्हाटएवर वी हैव अर्न आउट ऑफ आवर बोरिंग कॉस्ट रिडक्शन, 2010-11 में मैं 12% पे बोरो करता था, 17% लैंडिंग रेट थी. आज मेरी बोरिंग रेट 6.5% है, मैंने स्प्रेड 5% मेंटेन किया हुआ है. सो वट एवर एज ए कंपनी आई हैव गेन फ्रॉम 12% to 6.5%, 100% आई हैव पास्ड इट ऑन टू माय कस्टमर बेस. सो दैट हैज हेल्प्ड अस रिटेनिंग आवर कस्टमर. बट आपका पॉइंट सही है, 100% को तो नहीं हो सकता. जो कस्टमर एचडीएफसी का जाएगा वो जाएगा, बट we use some of the analytics tool I've told you in past. So earlier our prepayments were around 1.1% per month, so around 13-14% prepayment rate was there, apart from जो पैसा किस्तों में आता है प्रिंसिपल में. With analytics tool we have reduced it to 4-5% below COVID levels. So I think technology, transparent lending practices. थर्ड इज और 100% सोर्सिंग इन हाउस. तो क्या होता है, जब आप डीएसए के थ्रू सोर्सिंग करते हो तो उसको क्या हर साल कमीशन चाहिए होता है. तो आज आपसे लेंडिंग कराएगा, आप उसको अगले साल फिर 1% कमीशन दूसरे से मिलेगा तो उसका ट्रांसफर कर देगा. तो हमारा क्योंकि 100% इन हाउस सोर्सिंग था, तो वो हमको बचाया कि हर साल कमीशन नहीं पड़ा. तो आज हमारा एवरेज टेन्योर, जब हम 14-15 साल के लिए डोर टू डोर मेच्योरिटी है, हमारा एवरेज टेन्योर 7.5 से 8 साल आता है, वेयर इंडस्ट्री का टेन्योर 4 से 4.5 साल आता है. तो आई थिंक ये 3 पॉइंट है जिसकी वजह से हम बचे हुए. कमिंग बैक टू सर का एक क्वेश्चन कि असेट रिपोजिशन, तो सर आपकी बात सही है, लेकिन मैं आपको दूसरे पर्सपेक्टिव से समझाता हूँ. मैंने बोला 95% कस्टमर हमारे उस घर में रह रहे हैं जिसमें हमने फंड किया. एवरेज एलटीवी 55% है, लेकिन किसी का 30 भी होगा, किसी का 75 भी होगा, तब एवरेज 55 आता है. तीसरा पॉइंट मैं बोल रहा हूँ, मेरा 1 डे पास ड्यू नंबर 5% है, एनपीए नंबर आधा % है। एनपीए पे आप सरफेस ही करते हो, उसकी 10 स्टेजेस होती है। 13/2 का नोटिस छपता है, 60 दिन बाद आपको उसका सिंबॉलिक क्वेश्चन लेना होता है। उसके बाद में आप कलेक्टर के यहाँ अप्लाई करते हो, उसके बाद में कलेक्टर आपको ऑर्डर देता है। उसके बाद में फिजिकल पोजीशन के लिए पुलिस में अप्लाई करना पड़ता है, फिर वो 1 महीना लेते हैं। उसके बाद में वो कस्टमर को नोटिस देते हैं, और उसके बाद में अगर लास्ट स्टेज में होगी तो पोजीशन करके आपको देंगे। उसके बाद में 3 बार उसका ऑप्शन होगा। तो अराउंड 12 स्टेज होती है, और हर स्टेज पे 10% कस्टमर अपना पैसा देता है। तो इफेक्टिवली 0.5 का भी 10% विल गेट प्रॉपर्टी रिपोजेस्ड। लास्ट 11 साल के अंदर अगर हमने 2 लाख कस्टमर को फंड किया है, उसका आधा % कस्टमर हुए आपका कितना हो गया सर?
1000।
हाँ, तो 1000 केसेस में करीबन हमको रिपोजिशन करना पड़ा होगा। उसमें से आप मेरा बैलेंस शीट नंबर देखेंगे, 14 करोड़ असेट रिपोजेस्ट का नंबर है। 10 लाख का एवरेज देंगे तो 140-150 प्रॉपर्टी। मैंने आपको लास्ट 11 साल का टोटल राइट ऑफ नंबर बताया, 16-17 करोड़ रुपए। तो ऐसा नहीं है सर कि प्रॉपर्टी नहीं बिकती है, और मैंने बताया वेरी रेयर केस में प्रॉपर्टी रिपोजेस करनी पड़ती है, क्योंकि कस्टमर्स में रह रहा है। आप अपार्टमेंट फंडिंग करोगे, इन्वेस्टमेंट प्रॉपर्टी फंडिंग करोगे, लैंड प्रॉपर्टी फंडिंग करोगे, उसमें सब प्रॉब्लम आती है। और सबसे इंपॉर्टेंट चीज एलटीवी। देखिए, अगर आज आपकी प्रॉपर्टी की वैल्यू है 10 लाख और लोन 5 लाख है, तो कस्टमर खुद प्रॉपर्टी बेच के आता है, क्योंकि उसको मालूम है 5 लाख उसको मिलेंगे, 5 लाख हमको दे जाएगा। उसको मालूम है फाइनेंस कंपनी बेचेगी तो 10 के साथ ही मिलेंगे, और उसका 3 लाख का नुकसान होगा। तो ये हमारा पिछले 11 साल का एक्सपीरियंस रहा है। बट मैं आपको बताता हूँ, पिछले 11 साल में आई डोंट नो अबाउट कंपटीटर, बट नॉट अ सिंगल डीआरटी डिसीजन अगेंस्ट द आवास। सो स्ट्रॉन्ग डॉक्यूमेंटेशन फॉर अस इन लीगल साइड। We follow 100% norm of all the state. 100% प्रॉपर्टी में गुजरात के अंदर रजिस्टर्ड मॉर्गेज है, 100% प्रॉपर्टी के अंदर एमपी में रजिस्टर्ड मॉर्गेज है, 100% प्रॉपर्टी महाराष्ट्र में एनवाई पे है, 100% प्रॉपर्टी लीन मार्किंग है हरियाणा में। तो नॉर्मली लोग क्या होते थे कि पहले कि यार ये गवर्नमेंट को स्टाम्प ड्यूटी क्यों देनी है, और 100 रुपए के स्टाम्प पेपर पे आपने लैंडिंग कर दी, और फिर बाद में जब डिफॉल्ट होगा तब जाएंगे कलेक्टर के पास, तो उस समय बोलेगा 10 पेनल्टी लगा देंगे। तो वो सब इशू होते थे। बट सिंस वी हैव नॉट टेकन दैट रूट कि बड़े लोग अफोर्ड कर सकते हैं, हम अफोर्ड नहीं कर सकते, वी वर कंप्लाइंग ऑल बिट ऑफ नॉर्म्स फ्रॉम द वेरी फर्स्ट डे। I think that has helped us in this journey. Not a single case where we have not got the collector order, not a single case against us in DRT. I've told you total write-off till date, बैलेंस शीट ऑडिटेड 14-15 करोड़, आज 12,000 करोड़ की बैलेंस शीट पर 14 करोड़ रुपए का आपका रिपर्चेस स्टॉक है। So you can see, I think that all these practices has helped us in both the side. Hope I have answered.
No, that was very useful. That was extremely interesting. So thank you very much, Sushil ji. This was engrossing. This was interesting. You've done a wonderful job over the last 7-8 years. Our clients, we will hope that you carry on doing such a wonderful job. And thank you very much for taking the time to speak to our clients. Sushil ji, if you want to stay on, you can stay on. We'll now shift the attention to Tej and his portfolio. If you want, you can put your you can put your camera off and your video on your mic on mute. But thank you for your time. Really grateful for the time and the insights you've shared.
Thank you for giving this opportunity. And anybody, any question more, maybe they can write to Tej and we will further answer.
Will do, sir. So,
if required.
So folks, you heard the invitation from the MD and CEO of Aavas. He's inviting you to put your questions to Tej. Tej will direct them to Sushil ji and we'll get the answers back to you. So thank you, Sushil ji, and Tej, over to you. Thank you, sir. Bye-bye. And Tej, over to you for your presentation on the Kings of Capital portfolio.
Sure. So now that we have the December quarter results for all of the companies in the portfolio, especially the concern over the past sort of 18 months has been around the lenders. If we look at growth for this quarter on a sequential basis, we've seen that it's now back to or even better than pre-COVID levels on a sequential basis for all of these lenders. So for the Kings of Capital lenders, annualized loan book growth is now at 24%. And across lenders, it's pretty consistent, upwards of 15% for all of these banks and NBFCs. And this is a factor of the excess capital, like we've been saying, Sushil ji mentioned, for Aavas, for Bajaj Finance, for HDFC, for Kotak, the excess capital which is on these balance sheets. Plus, these lenders largely have not seen large-scale asset quality issues before COVID. So their balance sheets going into COVID were anyways better off than the rest of the system. And they've also been, because of the excess capital, they've been able to provide for whatever excess losses have come through during the COVID period, which has resulted in the 24% sequential loan book growth during this quarter. As we see economic activity picking up, we're seeing that this sort of growth will continue versus the 6 to 8% YOY loan book growth that we've been seeing for the overall lending industry. Impact of Omicron, whatever we've been hearing through our discussions with all of these lenders, has been minimal or negligible, whether it be in terms of disruption on asset quality or whether it be in terms of disruption on incremental lending, incremental growth. So this sequential loan book growth of 6% is very likely to continue. Plus, the market share gains are also very likely to continue going forward. And even for lenders of the likes of, say, HDFC Bank or the larger lenders like, say, Kotak or Bajaj Finance, we're seeing that size is not something which is inhibiting growth. Size is not a limitation towards growth, even though the industry is growing at 6-8%. Even the larger lenders have been able to grow at a pace which is, say, 8 to 10% higher than the industry growth. Coming to asset quality and provision coverage, we're seeing that the provision coverage ratios for these lenders have improved meaningfully. And we've seen, we've been writing about this, we've seen that incremental credit cost every quarter is becoming lower and lower because of these buffers which have been built in over the past 18 months. For example, on one extreme, we've seen Kotak Bank having a negative number on provisioning for this quarter. So Kotak actually did not only have to provide for anything, but they had a negative number on provisioning. So the provisioning line item had a positive impact on the P&L for Kotak this quarter. And this is something that all of the lenders in our portfolio have done. That is, they've created excess provision through the past 18 months, whether it be on the gross NPAs, whether it be on the restructuring book, or also on the ECLGS book. And so far, whatever we've seen, there have not been any meaningful slippages out of restructuring all the ECLGS book. Because asset quality has been better than what was feared during the first wave and even the second wave of COVID, we are seeing that incremental credit cost for all of these banks and NBFCs is coming out to be lower and lower with each passing quarter. If you were to come to profit growth, the PAT growth for the companies in the portfolio, when we are comparing this to pre-COVID levels, so compared to the average of the PAT number for all of these companies before COVID, which is, say, the average of June to December quarter of 2019 versus the latest quarter, we are seeing that PAT has grown at about 47%. So PAT has grown at almost a compounded growth rate of more than 20%. It's been around 25%. While stock returns have lagged the earnings growth. So like we've always said, over a longer period of time, earnings growth is equal to PAT growth. These companies have grown earnings even during COVID at 20-25%. However, stock prices have not moved at 20-25%. As you have demonstrated, if you were to take any bank, any NBFC, any company, PAT growth is equal to share price growth over a 5-year period, over a 10-year period. So for all of these companies, over the past 2 years, PAT growth has been at a 20-25% CAGR. However, if you were to compare the stock prices of these companies currently, which is 28th Feb stock prices versus stock price as on 31st December 2019, which is the period before COVID, the stock price is yet to catch up with earnings. And therefore, if you look at the last two columns, even though the earnings have grown at 25%, the price to book multiples or the earnings multiples for all of these companies have derated. And we believe there is no reason that these companies cannot continue growing at 20-25%. These companies will continue growing at 20-25% because even during COVID, despite subdued growth, despite increasing provisioning, despite pressure on asset quality, they've demonstrated this 25% growth during an economic upcycle. When there is no economic restriction, when there are no lockdowns, that sort of growth is very likely to continue. Coming to initiatives that these companies have taken, if we were to look at the lenders, there are two aspects of the business. One is you need to take initiatives around growth, which is the market share gains that we've discussed in the earlier slides. And second is initiatives around risk, that is your asset quality should be in check. So for all of these banks and NBFCs, they've taken initiatives through the past 18 months in both growth. They've been preparing for the economic upcycle. They've been preparing for lockdowns and restrictions to get lifted. And so they've been hiring heavily. For example, Hdfc Bank has hired about 18,000 people in the past 18 months. Similarly, Bajaj Finance on growth initiatives has launched the 3-in-1 digital platform. They've already guided towards increase in number of customers, which used to be 7 to 8 million every year. There's a new customer acquisition. That number will look like more like 8 to 9 million over the next few years. So that acceleration and increase in velocity of customer acquisition is likely to play through. Similarly, Kotak Bank has launched the home loan campaign at 6.5%, which is a benefit of the lower cost of funds and the liability franchise which they've built over the past 8 to 10 years. So multiple initiatives that these companies have taken on growth, multiple initiatives that these companies have taken to accelerate growth versus pre-COVID levels. Similarly, on the asset quality side, similarly on the risk side, we heard Sushil ji of Aavas talk about their investments on the analytical models, on analytics to predict bounce rates, not only when the customer EMI is due, but even 30 days before the customer EMI becomes due. Similarly, we have seen Chola realign multiple segments within their portfolio basis the risks that they are seeing. So, for example, Chola has been good at segmenting the portfolio across vehicle finance, LAP, and home loans, and even within vehicle finance into tractor, HCV, LCV, etc. And they continue to do that to mitigate risks. So we believe that these initiatives for growth have largely not been factored in because there has not been a lot of continuity for these lenders when it comes to demonstrating that they can grow on a continuous basis quarter after quarter. All these lenders need is 6 to 9 months at least of uninterrupted growth without any economic restrictions, and we'll start seeing the sequential numbers which we saw on the earlier slide of 24% growth also translate into YOY growth. So I'll stop over here and happy to take any questions that any participants might have.
Let's start with the question that I think we'll answer. We've answered hundreds of times, but obviously we'll answer for the remaining part of our career as well, hundreds of times, which is, should we be cognizant of valuations? After all, Hdfc Bank, they haven't done, the share price hasn't moved for a couple of years. Surely Tej, had you bought cheaper banks, had we invested in cheaper banks, we would have made more money than with Hdfc Bank. Is low price to book the way to go about choosing investments in financial services stage?
Sure. So if you look at this slide, this considers the whole universe of banks and NBFCs, whether it be over the last 5 years, 10 years, or 15 years. You can see on this slide that book value per share over a longer period of time mimics the share price growth. So whether it be a 10-year period, whether it be a 5-year period or a 15-year period, upwards of 80% of returns can be attributable to book value per share growth. and not much can be attributed to change in price to book multiples. And the logic is simple that, book value per share can keep on compounding over a long period of time at 15%, 20%, 25%. However, the multiple does not compound. The multiple cannot keep on compounding at 15%, 20%, or 25%. The multiple can maybe halve, it can maybe double. However, the book value per share, as we have seen in the case of many lenders, can increase by 10x, 15x, 20x over a 10-year period. And with the Hdfc Bank example as well, we've seen that book value per share is increased by 10x. However, the price to book multiple over that 10-year period cannot increase by 10x.
Okay. So Ronajit Shah asks an operational question. Let me quickly address that, and then we'll move on to some of the other questions on the portfolio. So Ronajit's asking, is there any plan to launch a scheme for retail investors? He's aware of the SEBI 50 lakh rule. So folks, what Ronajit is saying is, as per SEBI rules, we cannot take less than 50 lakhs in a PMS construct. That's not allowed by the regulator. So therefore, for Kings of Capital as well, 50 lakhs is the SEBI minimum. Ronald, as you've said in some of our past webinars, we're trying to see what we can do for those who cannot afford 50 lakhs. Obviously, in the context and the construct of PMS, we cannot take money less than 50 lakhs, but we're trying to see what other solutions we can pursue given the SEBI's regulatory construct. So give us a few months, we'll try our best to come up with something which works for you. Okay, let's go to another question that a lot of people ask, and I think it's a widespread misperception, but we can set the record right. So Vivek Sa is asking that there's a lot of fintech in our country apparently. Apparently, there are lots of fintech firms which have become unicorns, and he says that these fintech unicorns, they are supposed to have cutting edge technology compared to Hdfc Bank, Kotak Bank, ICICI Bank, right? So Vivek's asking, why are the big banks, why are the big lenders so slow to adopt technology that the fintechs, the cutting edge technology that the fintechs have? How come the big banks are not adopting it quickly enough? He's especially singling out HDFC. I guess he's referring to HDFC Bank rather than HDFC Limited. So question one, what's wrong generally with the banks? Why are they slow off the blocks on cutting edge fintech? And is there some impact of this on HDFC Bank? First of all, is HDFC Bank really slow on technology uptake? And secondly, if they are, what is the impact of this?
So if you were to break down the whole financial services universe into, say, banks, NBFCs, and non-lenders, right? What is the impact of technology on each of them? General insurance, we've seen there has been no new entry of any general insurer post 2017. Last license was issued in 2017. We have two tech-based players, Acco and Bodes in general insurance. Bodes started as a tech-based player, but now it's doing exactly what an ICICI Lombard would do, which is it's doing everything offline. Because they realized that if you want scale, you have to go to the car OEM. You have to tie up with the OEM, and that is where general insurance is purchased in India. It's not easy to scale up general insurance through an online-only distribution channel. Coming to life insurance manufacturing, whether it be in India, whether it be globally, because these are 20, 30-year contracts, it's not possible to do this only through fintech. You need a large balance sheet. For the first 10 to 15 years, you have to incur a P&L loss. Plus, you need to have a good enough brand name which people will trust for the next 20 to 30 years. So there is no life insurance which is done by fintech, either in India or globally. Coming to lending, if we were to talk about NBFCs in our portfolio, so we have Aavas, where we heard how they've been adopting technology and how they've used technology not only for underwriting but also for analytics, collection, setting up and deciding where branches are to be set up. Then the next company is Bajaj Finance, which has adopted technology across all its verticals. So they are also at the forefront of technology. And third one is Chola. They are doing vehicle financing. They have also made a big push towards technology by making an acquisition of PaySwift, which is a tech-based company and will help them in their lending foray using technology. Plus, Chola is also using technology for a lot of its collections when it comes to vehicle financing, LAP, which are anyways a high-touch business model. So all of these business models, life insurance, general insurance, NBFCs in our portfolio at least, they're not impacted by technology, or they are at the forefront of investing in technology. Now coming to banks, and specifically to the question of HDFC Bank, the data on HDFC Bank suggests that they've not only been growing at 20% in a tough environment, but if you look at the growth rates, they've only accelerated. The loan book market share of HDFC Bank used to be 7.5% in FY18. That stands at about 11% in December 2022. This is along with asset quality numbers, which are on the top right of the screen. Asset quality gross NPA numbers for HDFC Bank currently at 1.26%, are lower than FY18 or lower than FY19 as we speak. And during this period of time, therefore, they've grown value per share, they've grown EPS at about 20%. So while a lot of fintech players can lend money pretty easily, maybe they can do small ticket unsecured loans pretty easily, there is not a single fintech player which would have this sort of asset quality numbers. Plus, all of these fintech companies maybe have $1 billion sort of valuations, but none of them have been able to scale to, say, even $1 billion balance sheet. HDFC Bank has a 13 lakh crore balance sheet. At that sort of scale, they've grown at 20% and have a 1.5% gross NPA.
So folks, don't believe the false narratives. I mean, it's up to you what you believe. Our submission to you is you are being sold a false narrative. A, that the unicorns have some great fintech. Our reckoning is they don't. And B, that the mainstream banks are slow on fintechs. In fact, the mainstream lenders, whether it's HDFC Bank or Bajaj Finance, they are by far the largest fintechs in the country in terms of their tech spend, in terms of the number of software engineers and electrical engineers that they employ. And the results are in front of you. As they just top left, the HDFC Bank top left chart shows, HDFC Bank has gained more market share in the last 3 years than the entire banking sector combined. Add up all the banks, public, private, sab jod do, HDFC Bank has gained more share. And whilst doing that, it's dealt with COVID and kept asset quality under pressure. It's a money machine fired by technology. So if you believe the false narratives that you're sold that HDFC Bank is somehow low tech, best of luck to you. Our job is to keep our eye on the numbers and understand the comparative advantages. An HDFC Bank or an HDFC Life or a Bajaj Finance or an ICICI Lombard, all investee companies of ours, are by far India's smartest fintechs, not the so-called unicorns. Let's carry on, Tej. One question which comes up, and it's come up in the context of Aavas today. A lot of people say, well, it's all very well. Aavas has done all this stuff. Sushil ji has spoken about their analytics and how well they've dealt with COVID and so on. But surely the moment HDFC Bank turns their eye to Aavas's segment, they will blow an Aavas out of the water. Why is it that HDFC Bank doesn't destroy an Aavas? Why is it that firms like Aavas can actually build a sizable, defensible, moated franchise?
So there are two aspects to this. One is the size of the lending industry in India itself. Like Sushil ji also mentioned, they are at a 10,000 crore rupee loan book currently. And they've built this largely out of 2 or 3 states at best, which is Maharashtra, Gujarat, and Rajasthan, some part of Madhya Pradesh. So at a 10,000 crore rupee loan book, for Aavas to grow at say 20-25% even for the next 10 years, they'll reach at the end of 10 years at say a 1 lakh crore rupee loan book. India's lending market size today itself is more than 120 lakh crores. This is only banks. If we add up Housing Finance, if we add up NBFCs, if we add up all the unorganized sources of lending, it will be even larger. So at 1 lakh crore loan book for an Aavas, considering the denominator as even today's overall banking advances, it will still be less than 1%. 65% of this market share is still with PSU banks. So we know how PSU banks are plagued with inefficiencies or productivity issues, or there are challenges around capital allocation. That market share is still up for grabs, whether it be for Hdfc Bank, Bajaj Finance, or for any of the larger lenders. So that size itself is large enough of India's lending industry for multiple players to operate in the same segment and operate profitably. The second thing is the segment that Aavas operates in versus what an HDFC Bank would like to operate in. HDFC Bank would want to do something which is easily scalable and is completely decentralized and has a specific template. They would want to therefore lend to people who have salaries, who have income proofs, who have income tax returns, which can be easily verified and have a long history of such a formal income. On the other hand, Aavas does something which is a high-touch model, and therefore it will take a very long period of time for HDFC Bank or even for say HDFC Limited to do what Aavas is willing to do. Like Sushilji said, the top 50 cities in India itself has penetration of around say 10 to 15%. The cities where, or the towns and villages where Aavas is operating, penetration is sub 5%.
Okay, folks, lots of you are asking those same valuation related questions. We've explained before, we'll carry on explaining for many years, we don't mind. The PE multiple, the PB multiple, none of them have any predictive power, whether it's for the KCP lenders or indeed for any other stock in our country, right? The notion that the PE or the PB multiple or indeed the share price can give you any information is, that notion is grounded in fiction, not fact. The share price or the PE or the price to book is a random walk, right? Look up what a random walk is, but random walk has no information value. So even if, say, let's take a random company, let's take Aavas, since Aavas was the star of today's show. Even if Aavas's price to book halves in the next 10 years, provided, as Sushilji was saying, they carry on growing that business at 20% loan book and say PAT compounding. If they carry on growing the loan book and PAT at 20%, even if Aavas's share price, even if the price to book halves in the next 10 years, you will still take home a 13-14% return, -7 for the price to book multiple halving in the next 10 years, and plus 20 for the PAT growing at that rate. 20 minus 7, you end up with 13-14%, right? And therefore, looking at multiples tells you nothing, whether it's for HDFC Bank or HDFC Life or Aavas, or indeed for any other stock, whether it's in our portfolio, is not in our portfolio. So you'll have to get over this fascination of looking at stock prices and believing that they have some hidden message in them. Neither the price multiple nor the share price actually will tell you much. Tej, let's do one more question on this whole notion that crude chad jayega, right? Crude chad jayega, RBI will hike, credit cycle will tighten, and surely it'll be all over for lenders. How do we deal with that point of view?
Sir, if we look at historical data for lenders, for high quality lenders, inflation has actually worked out well, not only in terms of business, but also in terms of share prices. One of the recent webinars where we explained that if you were to look at high quality CCP and KCP companies, because they have pricing power, because in the case of lenders, they're able to keep a check on cost of funds and they are able to pass on any increase in cost of funds to their eventual borrowers. Inflation is actually a good sign because, first of all, interest rates hike when demand environment is good, when there is an economic upswing. Secondly, for say a HDFC Bank or a Kotak Bank or a high quality NBFC, the increase in cost of funds will be much lower than the increase in cost of funds for the rest of the sector. And therefore, a HDFC Bank or a Kotak Bank with a high CASA base will be able to take full advantage of the lower cost of funds and earn not only better margins, but also will be, as a result of the lower cost of funds, be able to lend to better quality customers.
Just to quickly reference this blog, it's on our website, folks. You can go and read it. This is a blog that we published, I think 8-9 days ago, saying busting economic myths. So first thing to note that rising repo rates periods of rising interest rates, let's assume that it begins in India, say this month or next month, periods of rising interest rates inevitably are accompanied by bull markets, right? So the last column of this table, you're staring at the table, even when the repo rate goes as high as 9%, you've had bull markets in our country. And the same is true for America, by the way, that you have never had rising rates in a bear market, either in America or in India. And secondly, as Tej is saying, when you have high inflation, so what we did was we took data for the last 21 years, July 2000 to December 21. We took every month. We classified months where CPI inflation was above 6%. We classified months where CPI is above 6% as high inflation months. And we looked at what happened in those months. So months where inflation is high, above 6%, quality stocks, which is Kings of Capital stock, consistent compounder stocks, they tend to have superior PBT margin growth relative to the Nifty. They tend to have superior PBT margin growth, profit margin growth to the Nifty. The revenue growth tends to be higher relative to the Nifty in high inflation months. And naturally, therefore, the share price compounding is at a significant premium to the Nifty. So the higher the inflation environment, the tighter the rate environment. Rates go up, inflation goes up. Champion lenders have a great time. The weaker guys fall away. The last question, HDFC Asset. I guess everybody has been reading about their fund flow data. We have it in Kings of Capital. Why do we have HDFC Asset in Kings of Capital?
So HDFC Asset, yes, it's lost market share over the past year or so. What they've done to address the market share loss over the past year is, first of all, this market share loss was a factor of the performance not being great over the past 2-3 years. During this 6 month, 1 year, 1.5 year period, their performance has come back. So that is something which will reduce or which will mitigate the market share loss that they've been seeing over the past 3-4 quarters. Secondly, they've filed already for 12 to 13 passive products. A lot of AUM which has flown to passives or which has gone to some of the new NFOs is also resulted in the denominator being much larger. That is the total AUM of the industry. A lot of it has gone to low profit pools or NFOs which have not really been floated to make money, but just to increase AUM, or for passive products on which yields as a 0.1, 0.2%. Now, HDFC AMC is not only focused on AUM or market share, but also on profitability. So therefore, they've not focused on any of these large-scale new NFOs, but going forward, from a market share perspective, the two factors which have been hampering them, one is performance that has come back. Second is the fund flow to passives. They filed for 12 to 13 passive products, which will again help them. So from an incremental perspective, we've seen them grow profits at about 18-20% over the past 5 to 10 years. From an incremental perspective, PAT growth for HDFC AMC it's expected to be in the high teens.
Thanks, Tej. Thank you. So, folks, that's all we have time for today. Thank you very much for logging in to listen to Sushil Agarwal of Aavas and the franchise they've built through tremendous work over the last 7-8 years. And thanks also for dialing into the Kings of Capital update. Thank you very much and have a good evening. Bye for now. Thanks, Tej. Thanks, Hardik. Thanks, Pankaj.